It's one of the biggest brands in the world. Very few people haven't consumed the carbonated substance. Coca-Cola has been in business for over 90 years, expanding from the colored fizzy drink to water, juices, and even coffee. Amid changing consumption patterns and falling demand for sugar, innovation has been crucial to its brand relevance and profits. But innovating into the cannabis market is not on the radar of Coke's global CEO, James Quincey, just yet. He says the immediate plan is to scale up in Africa, as the continent has huge potential to fizzle up future profits. Once again, thank you so much for giving CNBC Africa time. What brings you to town?
Well, we've come here. Actually, the whole leadership team of the company is in South Africa. Actually, we were in Nigeria earlier this week, and we spent the whole week in Africa. And I think what that is a representation of is our commitment and, of course, our interest in the huge opportunity that is the continent and Africa, and, of course, being that it's many countries, each of the countries in Africa, and how that's going to be such an important part of the future of the Coca-Cola company. We've been here 90 years. But it's going to be a huge part of the future. And so it's kind of in a way, a physical representation of our commitment to the continent.
Sure. And talking about Nigeria, I do understand that you also met with Nigerian businessman Aliko Dangote when you were there. So tell us what went down in terms of that conversation.
Yeah, we went to see him at his headquarters in Lagos. I mean, I think it was a session to share experiences and ideas, and I think what's incredibly impressive about what he's doing is the boldness with which he's investing. Some of the industries he's created, and of course most emblematically the refinery they're building there, and I think it's very interesting in two ways. One, it's inspirational in the sense of indigenous African entrepreneurs betting big on the continent with real capital and building substantive industries on the continent. I think that's really encouraging. And of course, he's creating an ecosystem all around it, which is what is part of what grows up around large multinational companies. Is you've got the company itself, but then there's a whole ecosystem of small and medium-sized companies which kind of work and supply it. And that's, of course, part of the development that the African continent needs.
So is there potentially a business relationship that we should expect to be announced between yourself and Mr. Dangote?
No, I don't think that's on the cards. I think he's a fantastic businessman, and he's done incredible things across the continent, particularly in Nigeria, and I don't think you should expect anything to be announced in the near future.
Right. And of course, James, the timing of your visit here onto the continent, it does happen to coincide with the recent announcement from your rival, Pepsi, which is looking to scale up further in Africa through its acquisition of Pioneer Foods. Are you worried about that deal? And what are your thoughts regarding what that means for Coke's future here in Africa?
Well, I think what it's a symbol of is actually the increasing investment that's going into the food and beverage industry by actually international and local competitors. Because if you look across the countries in Africa, you see not just the big companies, our traditional international competitors, you see lots of local companies also coming into the industry. So I think it's a symbol of people recognizing the potential in the coming decades for Africa, and a sign that there's going to be increased competition. So I think it's a big signal to us. We need to make sure we're at the top of our game. Innovation is a good thing if you pay attention to it, because it makes you think harder about what do people really want, what do the retailers really want, how can we continue to make ourselves the most relevant and the most attractive brands and partner for people. And I think competition in that sense is good, and it actually creates benefits for the economy too.
Of course, Africa is a multifaceted continent with huge opportunity that you do speak of, but also quite a number of challenges. 90 years in the game, what has the biggest challenge of doing business on the continent in your experience and your tenure at Coke so far been?
I think the challenges that Africa has faced over the last decades actually not too dissimilar from some of the other parts of the world in their histories and their economic development, and actually the development of our business. I mean, clearly part of it is infrastructure. Doing business requires you be able to do business, and the different aspects of infrastructure, and clearly there's a big infrastructure need in Africa and what needs to be built out. And along with that, I think there's a talent challenge. Clearly there's lots of people, lots of vibrant people who want to get stuff done, but being able to train them and bring them up and bring world-class practices. They'll get reinvented in Africa because no other part of the world is exactly the same. So whatever the best practice is somewhere else, it will need to be adapted. So really developing the talent pipeline and recognizing that as a big emblematic company, people will try and source talent from us. So as much as we invest and grow people, people will take them from us. And so we really have to be at the front edge of building a talent pipeline.
But in terms of that infrastructure challenge, particularly because it does come up quite high on the agenda for most companies, multinationals, Afri-nationals that do business here on the continent, how is Coke trying to address that? Are you making any personal investments to plug in the deficit to make it easier for yourselves to do business? What we look to do is to create the ecosystem around us. So there are aspects of the infrastructure that are not our business and not our thing, but of course we're a buyer. So when there's infrastructure that's, the building of, that's not our thing, sometimes what we do is we buy forward. So it might be difficult for someone to invest in our new glass factory, for example, because they don't have a market yet. But if we come along and say, well, okay, I'll give you a multi-year contract to buy glass from you, so you can sell to us for many years to come, and therefore you have much more security to build infrastructure. So whether it's a glass factory, whether it's farmers growing apples or oranges, the role someone like Coca-Cola can play is helping them see a guaranteed market into the future that encourages the investment. Then, there's a whole series of things that goes against, but I think that's one of the big roles that multinationals can play, which is creating demand and creating secure demand that draws in the investment. Staying with Africa, what is the current size of the continent in Coke's global portfolio, and what will the future size be in the near term, if we're talking 5-10 years, as you talk about the opportunities that are around here? Africa for us, we haven't broken out the total Africa number, but it is not nearly as representative in our total numbers as the population would make it be. And the population is going to grow much faster than the average of the world. It's the youngest billion people in the world. The median age in Africa is half of Europe. So whatever it is today, it should be much bigger tomorrow. And if you start projecting out even further, the population growth of Africa, clearly it should be an ever-expanding piece. So I think our focus is, look, we've got 90 years of history. It was never a straight line of development, but I think Africa is now at the point where it's going to start to really have a virtuous circle of economic development go on. And given the population growth and the youth of the population, I think that's going to create a tremendous number of expansive business opportunities. So I think Africa for us will be one of the core growth engines for the company going forward, and that's why we're here, to make sure we're investing enough in Africa. And how much are you investing? Can you give us an indication of your planned Capex pipeline for the continent, and which countries are likely to attract to the bulk of that capital? Yeah, we've been spending billions in Africa, and there's billions more to come. But for our business, ultimately, because we're an everyday pleasure, it's a consumer business, and so we go where the people are. The markets that are growing strongly, whether it be Nigeria or Ethiopia, Egypt, South Africa, obviously we have a good business. So I think in the end, consumer businesses like ours are ultimately drawn to where the people are, and that's where most of the Capex goes. But we've been building factories all across Africa. It's one of the parts of the world where there's still a need to lay down basic infrastructure of factories and to create the distribution networks that go with that, that ultimately connect all the stores that are out there. And South Africa being your headquarters here on the continent, the question is, this is the first time we're actually having a conversation with Coke following the merger between SABMiller and Anheuser-Busch, and there was quite a lot of moving parts in that deal which changed the operating structures. So the question is, how has that deal impacted on your day-to-day operations since it happened?
Yeah, I mean, I think since we brought the various bottling entities together in Coca-Cola Beverages Africa, I think once we got past all the twists and turns of the various parts of the deal that happened, or the various deals, I think we've been able to focus on investing in the business. So what you see now is a great job by the local management team here in South Africa, and particularly up at the Eastern African coast, really getting down to the business of doing what needs to be done, investing the Capex in the new factories, in the distribution systems, upskilling the sales force and the workforce, investing in the brands. And what you see now is an increased growth rate of the business. So that's the problem with deals and mergers. They always distract everyone. And so now that is out of the way. People have got back to the basics of running the business, and they're doing a great job of driving the business into growth.
But what is distracting in South Africa's economy is the state of the economy. It is not in top form. And how has the current economic headwinds that we are experiencing affected Coke's bottom line when looking at the South Africa portfolio?
Yeah, South Africa's going through a tougher phase at the moment. Now, we've been here a long time. 90 years in the continent, and so we've been through booms, we've been through busts, and we've been through tougher periods, and I think what we have learned over the years is to get really focused on what you can control. What is it that we can do that will make our business better? If the macro environment is slightly more favorable or less favorable, you can't change that, but what you can do is focus on what do you need to do. How do we stay connected to consumers? It's in the end, it's a business that starts with brands and connecting with people. So as the mood of the country and the mood of people changes, how do we make sure our marketing, our selling and distribution is in tune with where people are, and focus on controlling the bits of the business we can control? And that in the end is what's helping them grow the business for Coca-Cola Beverages Africa. Stay focused on what we can control. We can't fix everything.
But what about your view on the political environment? Because many businessmen have spoken about the political instability and the uncertainty that has essentially made business confidence remain depressed. What's your view on the politics, and especially as our president, Cyril Ramaphosa, is asking business people to invest further in the country to help lift growth?
Yeah. Look, we take a long view on politics and governance, and I think the long view is actually an improving environment across Africa, across South Africa. The long trajectory. We've been here a long time. We're going to be here a long time. So we are not trying to surf the wave of short-term ups and downs in terms of politics or macros. We're trying to invest for the long term. So I think that to the extent the government is focused on long-term fixes to the structural challenges in the economy, we're very supportive of that's what needs to be done. And I think you see that in South Africa and across the continent, and we'll continue to invest.
And one of the biggest structural challenges right now for South Africa is Eskom, and it has impacted manufacturers in the country quite severely as a result of that, lack of security of power, and also the high costs. How has the Eskom situation impacted your business?
Yeah, clearly it impacts us. I mean, from a manufacturing point of view, it's an impact. But of course, if you've got a large plant, you can set up your own backup supplies. So that's not really the biggest impact to us. And it's a business that for which electricity is an input cost, but it's not the massive input cost for us. So yeah, we'd obviously prefer if electricity in South Africa were at a globally competitive price. But the biggest impact that we see is how it affects the people in the country. It affects them in terms of their disposable income, because if they have to pay more for one thing, then they got less to spend on other things. And also it affects our retailers. Maybe not the big organized trade, the supermarkets. They can organise backup power sometimes, but the many mom and pop stores up and down the street here. If they lose electricity, then they lose the ability to cool the Cokes in the cooler. And you know, we all know that a cold Coke is much better than a warm Coke.
Definitely.
So it does hurt in the end.
Certainly. Another issue that has impacted your sector is regulation. Two key regulatory changes so far, that being the introduction of the carbon tax and also the sugar tax. So how has that impacted you?
Yeah, of course. Whenever taxation goes up, it depresses the business, and so there's no difference in this case either. The sugar tax depressed business. I think our view on that is, you know, what's the objective? Of course, governments need to raise funds. Taxation is an inherent part of a modern economy, and so what we advocate for is, if whatever taxation needs to be put in place, let's make sure it's linked and it's the most effective means of achieving what the government wants as the outcome. So if it's obesity, is the sugar tax going to achieve that? Our view would be, if it's just over soft drinks, it's too narrow to drive a major health outcome. It should be a much more comprehensive plan, and I think you see that it hasn't made that much of a difference. Not that we don't need to do things to help, and you know, we've reformulated to reduce sugar, we've innovated and reduced package sizes, and we think that makes more difference. But so if you start with the objective, I think it's been too narrow to achieve its objective. And if the objective is raise money, which sometimes is a need, then you know, I think economics would suggest the broader the net, the more effective it is. Otherwise, when it's very concentrated, it tends to impact heavily the jobs in a certain sector. So the sugar industry has obviously been negatively impacted in jobs by the sugar tax. So if they're more spread out, it's more efficient fiscally to raise the money, and it allows more industries to adapt and not create such a big jobs impact.
But talking about, you know, the move to, you know, try and make people healthier and lower the rates of obesity, we do have changing consumer consumption habits. There is a personal drive for people to want to be healthier and, you know, consume less sugar. So how is Coke adapting to the changing consumption trends to ensure that you remain competitive and that profits continue to fizzle?
Sure, and consumers are demanding more choice ultimately, whether it's healthier, whether it's different categories. The big overall umbrella is they want more choices, and so what we see is what we have to do, whether it's responding to the choice they want or helping moderate the calories. Firstly, reformulations. So we've made a big drive in the case of Coke, Coke Zero Sugar, which has got no sugar, obviously zero sugar and 0 calories, and that's growing massively around the world, including in South Africa. So we think by providing innovation in zero sugar alternatives, we can help connect to the consumer trend and help solve some of the problems around overconsumption. We've had a big effort around smaller packages. So if people want to have more drinks in the day, but they don't want more calories, then smaller packages will help them have, you know, more of a treat every now and again. And then, you know, reformulating. We've taken some of our historic brands around the world and invested in how do we manage to give consumers the taste they want and yet reduce the sugar. So there's a lot of things that we can do to help deliver on choice for consumers, but with less calories.
And then your push into the coffee market. Tell us what your plans are for there.
Yeah, I mean, the coffee market is massive globally, really big market. And the biggest piece of the coffee market is coffee sold in someone else's outlets. So I think sometimes people focus most on coffee shops where the brand name is the same on the door as on in the shop. But the biggest part of the market is actually providing coffee in someone else's outlet. And that's what we've been really good at with cold drinks. Depending on where you are in the world, they give it a different name: food service, hotel, restaurants, cafes, but in the end it's the same idea. How can we help retailers of whatever shape or size expand their business, and now we can offer not just a cold solution, we can offer a hot solution. And that may be like the Costa vending machine, the Costa Express, which is very famous in parts of the world, or a coffee machine with beans. We've got a brand that's very well recognized, that has beaten out the competition where it exists, of all forms and shapes. So we're confident this will help us grow around the world and become a total beverage provider to the retailers.
And then the cannabis market as well. I mean, quite a lot of interest there, as you know, regulation has become a lot more loose regarding the consumption of cannabis. There's talk of a cannabis-infused or flavored Coke, and I'm just interested in your plans for that market. Is it just limited to making the flavored drinks, or are there plans to also own some cannabis plants to control that side of the value chain?
I know people keep talking about it, but there are no plans. So there's no plans for a Coke with cannabis or any other variant of cannabis from the Coca-Cola company at this stage. I think we have taken a view with all sorts of ingredients across time, which is we want to see the build-up of longevity of science before we start using new ingredients. I mean, in the end, people trust the drinks they buy from the Coke company. That's a trust that's been a long time earned. And so we want to feel on very sure ground before we start using new ingredients. And we're not there with cannabis at this stage, so there's no plans.
Just bringing it back to innovation as we do wrap up. You have a meeting with a financial services company, Discovery, who are very active in the innovation space. So tell us what that meeting is about, what the purpose of that will be.
Really, it's informative and exploratory. The reality is every generation of managers at Coke has had to make Coke, the brand, and now the rest of the portfolio, relevant to people in new ways. And so, the biggest danger of being large and successful is you become inward looking and you believe you have the formula of success forever and ever and ever, and that's not true. And so we constantly have to push ourselves to go out and discover, no pun intended with everything Discovery, discover new things and understand how people are seeing the world differently, and constantly be curious about how we could be different and make ourselves relevant.
And just lastly, James, we have seen a recovery in your share price this year, so your investors are happy, but ultimately it's about what else is in store. So what is your message to the investment community about what they can expect, and how their portfolios ultimately can be fizzled up?
Yeah, I mean, for sure it's been gratifying to see the stock move from being 40-something to being 50-something over the last couple of years. And I think that's a sign that people are recognizing that we're bringing the growth strategy back to work again. I mean, if you go back a few years, we were just growing kind of average, below average of consumer products companies. Now in the last couple of years, we've pushed ourselves up into the top quartile. And so what we've been telling investors is, look, we believe we have a strategy to become a total beverage company, and we have a network, an ecosystem of bottling partners that can deliver on top quartile revenue growth rates for consumer product companies around the world, and of course let that flow through profits to the shareholders, do the right things for the stakeholders that exist in the business. And I think that's a story they're starting to say, okay, that looks a lot more interesting.
James, thanks so much for your time.
Thank you.